Chapter 9, Question 8a. Alright, for this question we have a company called Ryan Manufacturing. They sell flat pack bookcases to retailers, and they had a bunch of transactions for the month of September 2019. All sales on account come with terms of 210 net 30. So what we've been provided are two different journals, being our sales journal and our cash receipts journal. So our sales journal is where we provide invoices to our customers because it's created an accounts receivable and they'll pay us later. Versus our cash receipts is where our customers pay us immediately. So the first part is September 1st, we received a loan from the bank of $15,000. It's not a sales, it is a cash receipt. So we'll look at our cash receipts journal and we'll want to record that transaction. It's on September 1st. It's hitting our bank account of the bank loan, which is account number 220. It's a debit to cash of $15,000 because we actually have the cash in our account. And it's a credit to other because there's no real other categories in our cash receipts journal that fit this. So it's a $15,000 other credit. September 5th, we sold products for cash to Brock Retailer for $8,400 with a cost of $46.20. So again, this is considered a cash receipt. The customer paid right away. September 5th, cash sales, debit to cash, $8,400, credit to sales, $8,400, and we can record our cost of goods sold and reduction of inventory of $4,620. On September 8th, we sold products on account. So if this is on account, it will be on our sales journal, not cash receipts, because we don't have the physical cash yet. So for the September 8th transaction, it's to our furniture outlet account, which is the AR name for a vendor, or sorry, customer. We will hit both accounts receivable and sales for the amount of the purchase or sale for $10,600. And we will debit and credit cost of goods sold and inventory for the cost identified being $6,360. The next transaction says September 12th, that the furniture outlet paid the amount from September 8th. So in this situation, it is 4 days after the date of the sale, within the discount period being 10 days, so there's a 2% discount. The 2% discount on the original AR of $10,600 calculates a sales discount of $212. So the total AR needs to be removed of $10,600. Okay. 2% of $10,600 is $212. Okay. So the net cash amount being paid by Furniture Outlet is $10,388. The last transaction we're told is on September 21st, we sold products on account to Brock Retailer. So Brock Retailer, September 21st, total sale was $6,200 with a cost of $3,410. Now that we've recorded all the transactions, we need to subtotal our various journals. So in our sales journal for the month, we have a total debit to AR and credit to sales of $16,800 with the account references below. We also have a debit to COGS, cost of goods sold, and credit to inventory of $9,770, which is accounts 500 and 120. For our cash receipts journal, we have total incoming cash, which is account 100 of $33,788. Total debit to sales discounts at $212, account 410. Credit to accounts receivable of $10,600, which is account 110. Credit to sales of $8,400, which is account 400. And a credit to an other account being $220 for $15,000. And then a debit to both our COGS, cost of goods sold, with a credit to our inventory of $4,620. The next part of this problem says, where appropriate, update the AR accounts receivable subledgers, including referencing. At the end of the month, calculate the totals of the columns in the journals and update the controlling account. Also show references for column totals, assuming amounts are posted to all general ledger accounts. So in this situation, we have our accounts receivable account, which is account number 110 as per our chart of accounts. And we want to record the transactions from our journals. So we have, first of all, from our sales journal, SJ, we had a debit of $16,800. And from our cash receipts journal, we had a credit of $10,600 in the month, for a total balance in our AR account, assuming no other opening components, of $6,200 as a debit balance. Okay. The sub-accounts for each customer, which we had 2 customers in the month, being Furniture Outlet and Brock Retailer. We look at Furniture Outlet from our sales journal account. So our sales journal, Furniture Outlet, we hit $10,600 as a debit under AR. And from our cash receipts journal for Furniture Outlet, we had a credit to AR of $10,600, leaving no balance for this customer. For Brock Retailer, there was nothing, the only entry we have for Brock Retailer is from the sales journal, being a debit to AR of $6,200, and there's nothing under cash receipts for Brock Retailer. So therefore our sub-accounts by customer, total the $6,200 debit, which balances to our master AR account being $6,200 debit balance.